Yo, what is going on, YouTube? Wanted to make a quick video on how I mark up my key supply and demand zones. Basically, where smart money basically buys my slash POC zones, my point of control, where I'm able to catch my precise entry and how I basically coordinate that with the Delta footprint chart. Obviously, if you guys have been following me, let me just share my screen for you guys. Obviously, if you guys follow my trading strategy, you know that I incorporate the Delta footprint chart with basically all of my confluences. But I'm going to break down how I basically do it. I know a lot of people have been asking me. The first thing I'm going to do, I'm going to clear up my chart so that way you guys can kind of see. So the first thing that you want to do in particularly is go get on the bigger time frame. Whenever you're looking for those big key supply and demand zones where I like to, again, coordinate my Delta footprint chart with them, you have to start off with a bigger time frame. It's like you want to get a holistic view of the market itself, and you kind of want to see where it's kind of going, right? So, number one, people have been asking me like, how do I have these lines on my charts? I'm gonna kind of break that down for you guys shortly as well. If you right click your mouse or your keypad, this should pop up. Now, if this doesn't pop up for whatever reason, you're gonna come up here right over here at the top of your screen. Right here is going to say settings. You're going to click that. Now on your settings tab, you're going to see a bunch of different things. You're going to see symbol. You're going to see status line. You're going to see canvas. You're going to see scales and lines, trading, alerts, events, etc. Right now, if you want economical red folder days on your trading view, make sure you check this off so that way they pop up here at the bottom of your screen. But we're not looking at that. We're looking at how to make horizontal lines. So the first thing you want to do is you want to come here where it says grid lines, and you want to make sure you have it at horizontal only, and then put it to a color that you generally really like. For me, I like the color blue. Again, it's all up to basically you. Now, once you kind of have that aspect into play, I personally like to go to the daily time frame. Now, why? Because again, I get a deeper view of the market. So I want to look at my high of my chart. Now, predominantly, I mostly day trade the S&P 500. Sometimes I do day trade gold, but I've been having a lot of success, specifically in particularly with SPX. Now, the first thing I'm going to do, I'm going to grab my little box creator right here, and I'm going to do something like this. Now, I'm going to stretch out my my zone as much as I can. Now, I'm going to explain to you exactly why I'm doing what I'm doing, and I'm going to make it as thin as possible. So I want to make these as thin as possible. So the reason for me making this is because I'm looking where price likes to simply make its big break in it's my bad an explosive move from my supply and demand zone, which is typically where smart money typically gets in. And when you align this with the Delta footprint chart, it just makes things infinitely easier. And again, this is how my my PNL has been consistently growing because I always do this. And I have never changed this ever since I started to kind of learn about it. So now that I have that into place, I'm going to come right here, right click my mouse, and I'm going to click clone. Once I do that, I'm going to scroll this down and I'm going to look at the next level where we saw an explosive move. So you guys can see right here, we saw a higher high on December the 4th of last year. We saw price completely melt down. To be exact, we melted down literally over 200 points right over there. So from that aspect, again, the same thing. I'm going to right click my mouse. I'm going to click clone, and then this is going to pop up. I'm going to scroll down, and I'm going to look all the way down. Now, I don't want to make my zones too spread out, but again, I want to make it pretty much identical. So right here, we have a break of market structure, and over here, as you guys can see, the same thing. We saw price touch this area, and we completely melted. And the same thing for bullish activity, right? If you guys notice right here, price touched there. Again, it was a massive supply and demand. Smart money got in. You put Delta footprint chart with this, boom, it broke out. I call it my kill zones. Now I'm gonna again right click my mouse. I'm gonna press clone, and I'm going to come all the way down into my secondary level, which is right here at these lower highs. So you can see that every single time I'm marking up my supply and demand zones, or my POCs, or whatever you want to call it, you guys can see that I'm essentially putting them where massive, there's massive moves in the market. And again, simple market structure when it comes to lower highs, lower lows, higher highs, lower lows, et cetera, et cetera. Those are going to lead to, break of market structure, and break of market structures where you want to start looking for your entries for your position. So again, same concept. I'm going to grab my yellow zone. I'm going to bring it down to right above this break of market structure. When I get into the smaller time frames, you guys will see exactly why this makes sense. Now, before I used to make these go completely all the way down, but just kind of seeing how the market is going, we're likely going to test higher highs in the daily within the next 60 to 90 days, in my opinion. I don't see us going any lower. So I'm going to put this one right here, where we see a big cluster of accumulation before we drop down, and then we reaccumulate, and then boom, we went back up. So again, all of these zones are very, very, very solid when it comes to my entries. Now I'm going to put it here at this change of at this OCH right over here, right near this higher low, right over here. And I'll probably do like 3 more in case market does retrace. And I always update these. I remove them. I add a few. You guys can see how I'm able to kind of do it. So now I put this here. I'll do one more right over here. And I'll probably bring this one down to these higher highs, like right above them right here. So boom. So once I kind of do that, again, this is just my personal preference. I like to make them, pretty much all aligned. This isn't something that you have to do particularly, but I just do it because I just like it to look, aesthetically pleasing. And I like it to look nice overall. And as you guys can see, that I'm gonna do it with every single zone that I've created. And again, these zones play as my kill zones. This is where I get my entries, and I'm able to catch really good moves, especially when they break from the zone. And I'm going to show you some of my recent journals as well on how they align. And then the last thing I'm gonna do is that way I don't, like, when I move around my mouse and I'm back testing, I don't mess it up. I'm gonna right click it, and I'm gonna look at it, and I'm gonna click lock. I'm gonna right click, and I'm gonna click lock. And the reason for it is I don't want my zones to ever be moved unless obviously I move them myself. But you guys can see that I'm now gonna lock all of my zones so they don't basically move in the market. So they don't move on my trading view. Sorry, when I'm marking up and doing things on my chart. So once I have it all, you guys can see that I can freely, move and nothing happens. Now look at the beauty when we go on the and by the way, mind you guys, it doesn't have to be so even out. Like you guys can see, maybe this one right here is a little bit bigger than this one. As long as they're at a key point, that's the most important thing. But going back to what I was saying, now when you go to, like, let's say the 5-minute, right? Let's back test. You guys can see, look at this. We broke clearly from these higher highs and completely dropped. Now, obviously, this is not an entry, but let's say, for example, this was, 10:45 in the morning. This would have been a solid entry. And I'm assuming if you add, not I'm assuming, I know when you add the Delta footprint chart, right over here, we saw a massive area of liquidity being, gathered, and boom, we just dropped down. So that's why I like using the my kill zones. Look at this as well, right over here. Let's look at this zone right here. Now they're not always beautiful, but you guys can see here we touched here, shot up, right? Look at that. We come here, another perfect example. We come here, we come accumulate, and we shoot up. Same thing here. Touch the zone, shoot up. And this is how I'm able to, again, gain solid entries on my position. Look at this. I can't even make this up, guys. Like right here, again, supply and demand zone, smart money's looking to get in. Boom, we shoot up. Now, of course, not all these positions I'm obviously trading, but the ones early in the morning, like 9:30, 9 a.m., you guys can see that, I'm typically trading those areas. And that's how I'm able to really mark up. And let's say, for example, I'm looking for, accumulation to an explosive move. Let's go for like 9 a.m. This is a very perfect example. Let's look at this, guys. And again, when you add the delta footprint chart to this, it just makes it infinitely easier. We see price all of pre-market open during Asia London of that specific day on March the 7th. You guys can see that we were accumulating sideways action, and then boom, we started dropping. Now this was around like 9 a.m. And again, in this area here, again, we're just choppy, wicking out, and then boom, what do we do? Break of market structure, absolutely ripped. And if you would have stuck in this position, and again, I'm someone that uses the delta footprint chart, I would have been able to see volume kicking in. I utilized my lazy bear, my RSI to an extent, but with the majority of my positions, I'm mostly using the delta footprint chart. Then I come here, I wait for a break and close. Volume is showing me that, hey, sellers are nowhere to be found. I like to have my take profit from zone to zone, pretty much at this low right over here. Maybe get it from right here. Have my stop loss pretty much at this low right here, at this candle, in case we do drop down. I'm only risking pretty much 8 points, which is typically what I like to do whenever I am trading. And you guys can see that this would have been a freaking beautiful trade, and I would have been able to net a serious profit. And again, when it comes to indices, whether it's US 30, SPX, NAS 100, like, yes, of course, we want these freaking moves where we get in, right here, and we catch this whole freaking move right here, and we catch over 167 points. Like, of course, we all want moves like this, but it's not, it's not always going to happen. But what a lot of people don't understand is that with a $200 account, with a $500 account, and I want to get you guys to forget about funded accounts for a second, because if you've been actually tapped in, you're investing in your crypto portfolio, we're about to reach altcoin season, you're not going to need a funded account. So let's just say, for example, you have a $200, $300, $400, $500, $1,000, $2,000 trading account, and you catch a 45, 50 point move. Dude, that's a significant amount of money on that type of an account. Like, you're making about $100, $200, in a position if you're able to capitalize of this. So that's how I look at my POC. That's how I mark up my supply and demand zones, my POC zones, and whatnot. So again, I look for where market makes its key moves. And again, if I go on the 4-hour, same concept. Like, I'm looking for when market breaks from these areas. And again, I can't even, like, even if I wanted to lie to everybody on the Zoom call, like, well, what happens when we touch this area here? We shoot up. What happens when we touch when we create these lower highs here? We drop down. What happens when we touch here? What happens when we touch here? What happens when we touch here? Fair value gap. Boom. Price doesn't respect that. It drops all the way down. What happens when we touch here? What happens when we touch here? Like, same thing here. Like, I can keep going, guys. Like, here, up here, right over here at these higher lows. Like, I can just go on and on and on. And again, this is how I'm able to capture these amazing moves. And again, when I incorporate the Delta footprint chart with my, I call them my kill zones. I call my strategy kill zone breakout. I don't know. But whenever whenever I look at that and I add the Delta footprint chart, price, or just in general, me getting my positions comes a lot better. I'm gonna reshare my screen because I want you guys to see the whole thing. But even when I pull out my journal, guys, I want to actually show you, because I want to make sure it makes sense to you. I want to show you my most recent journal that I did. I think it was Friday or Thursday. I don't know. The 16th. When was the 16th? It was yesterday, Friday. So let's open. And again, I want to get in the habit of always sharing my journals, because I want you guys to see what essentially I'm doing. Now, this trade particularly, let's break it down, right? Let's break it down to the sauce. I was able to net, I think it was like $175 on my live account. Again, I'm getting in the habit of trading live. So you're in full control of your portfolio. Now, obviously, you guys can see how the Delta footprint chart, positive delta, positive delta, positive delta, positive delta. We're smashing my POC on the delta. So the thing is, as well, on the Delta footprint chart, maybe I'll make a video later on, But on the Delta footprint chart, I have already my POCs preset to the white boxes. So again, the white boxes typically align with my yellow supply and demand where price or smart money likes to generally get in. Because that's what I'm looking for. I'm looking for smart money to get in and rip to the upside or to the downside off of my POCs. So you guys can see I wrote here, and again, I'm going to read you my whole journal, and this is how you guys want to start journaling your positions as well. So I wrote this. Something I'm trying to notice more often is that price tends to make its big moves during 11 a.m. And that's generally true over the last 2.5 weeks. Prices have been very choppy from 9:30 to about 10:45, and then boom, 11 a.m. hits, and we fucking rip. I might need to adjust how I approach my entries because today I took a loss at 9:45. I got wicked out. It happens. Proper risk management helped me, of course. I saw a break and close below my POC. The Delta footprint chart was showing strong buyers. However, for some reason, a surge of sellers entered the market, sweeping my position and causing a sharp dump from 59.25 to 59.07. About 18 points likely happened due to a red folder day right at 10 a.m. I think Jerome Powell was speaking, I think, if I'm not mistaken. Despite the loss, I stayed confident in my overall bias. All signs were pointing towards bullish momentum accumulation. Bullish momentum. Accumulation was building and price was struggling to break below my previous POC or supply and demand zone, whatever you want to call it, at 59.04. Now let's break that down in my photo. So right here, boom, let me zoom in so you guys can see what the hell I'm talking about. Hold on. How do I? Let me just, I think I zoomed in too much. Okay, beautiful. So you guys can see right here. We had a break in market structure, right? Originally, my buy was here. Wanted to rip and catch these highs, break these higher highs. That was my initial intent, but it happens. We dropped down. Volume didn't go into my direction. We had a surge of sellers for Jerome Powell's mini speech. And boom, guess what happened, guys? We tested my lower lows, almost creating something called a bounce play. We struggled and we basically respected this area, bounced smoothly off of it. Now, I should have gotten in a lot earlier, but just because I took a loss and I didn't want to risk my portfolio gain on a Friday, especially, I waited to confirm that this move was going to happen. So once we broke, and again, we reached the previous break of market structure up here, and we basically broke that level, I said, you know what, I'm confident. We bounced off my kill zones respectfully. At this point, sellers were losing momentum. The RSI was coming in that, hey, we are looking for bullish activity. But more importantly, my Delta footprint chart was printing positive delta. We had strong, aggressive buyers coming into play. Sellers were completely leaving the market, and we created a small fair value gap right over here. We just respected that, and we just kept going up. And at that point, I got into my second entry, which was literally right here, and then so on and so forth. I was able to catch this big move. Now, going back to what I was saying, despite the loss, I stayed confident in my overall bias. All signs were pointing towards bullish momentum. Accumulation was building, and price struggling to break below my previous marked POC or again supply and demand zone at 59.04. Price bounced off this level smoothly, almost like a textbook bounce play. When I noticed price was respecting lower lows and volume started picking up again, I re-entered at a lighter position. So again, I got in fairly light. Why? Again, because it's Friday. I don't want to risk my gains from my portfolio, my trading account, and I just didn't want to again take an unnecessary loss. And then I wrote this as we broke past the market structure zone and nearly my previous entry, I gained more confidence and I spotted a fair value guys being formed around 59.16 and 59.24, which is literally right here, 59.16, 59.24. And the lazy bear indicator was showed that sellers exiting the market while buyers stepped in. The RSI confirmed this shift, and of course, the biggest and most important thing, because the RSI and the lazy bear, they're just like a cherry on top. But the most important thing was the Delta footprint chart had a significant printed of buying candles from at three. Sorry, the Delta footprint printed a significant amount of buyers candles at 3.56 million and 6.464 million, giving me that final confirmation that I needed that, hey, buyers are coming into this position. And then I wrote this, guys. I'm very happy with how this trade played out. Although I lost 8 points on my first entry, and I was able to recover over 35 points, resulting in a net profit of 26 points for the day. A great way to end my trading week. I'm very proud of myself. I'm sticking to my conviction. Moving forward, I'll consider waiting until 9:30 to 10 a.m. to take entries and focus more around 11 a.m. I'll still be open to trade at New York Open. However, I'll be more selective with my entries. Thank you so much, God, for allowing me to profit this week. All glory to you. So again, guys, it all comes down to this simplicity of waiting for my kill zones to be respected. Again, supply and demand, smart money gets in, volume delta shows me that, and boom, we rip up. So that's how I essentially, guys, mark up my kill zones, POC zone, whatever you want to call it, my supply and demand zones where smart money gets in. So I'm able to have precise entries in the market. I coordinate that with the Delta footprint chart, and I'm able to kind of get that. And this can work with whatever pair that you want. But again, mostly I trade the S&P 500. I do trade gold here and there, but it's not a pair that I actively trade. Just so often here and there, but my main bread and butter is the S&P 500, which kind of goes back into the thing I want to end it off with. Stick to one damn pair. Stick to one pair that you are comfortable using, where you have been seeing gains in your personal P&L and your personal trading account, and try not to deviate from that. Over the last 2 weeks, I tried to adopt gold into my daily instrument of trading. And I was trading Asia, and I was trading pre-London, and sometimes very early London, which resulted in some wins, resulted in some losses. And I didn't like that. And sometimes they would burn the gains that I made with the S&P 500 during New York session. So instead of that, I really looked at my whole journal. I said, hey, you know what? Where have I been the most profitable in? And it's essentially when I started trading, when I started trading and focusing specifically on SPX. And again, it goes back to what I was saying: one pair, one strategy, one time, and that's it. Once you win, call it a day, and don't start trading more in the evening or the afternoon. But hopefully this video made sense to you guys, and hopefully y'all got some value from this. Again, as per usual, if you liked this video, make sure you like, comment, and subscribe. Share it with a friend, because trading is by far the ultimate skill that one should build. Because again, you are in control of your outcome. You win because of you, and last but not least, you lose because of you. Peace out.